If you want to learn what drives the market on a daily basis, understand why you get stopped out all the time, and never enter a trade again alongside the liquidated traders, then make sure you watch this video all the way up until the end to understand and to see the ultimate liquidity guide for 2024 and 2025. My name is Smart Money Mo, and in today's video I will be teaching you everything there is to know about liquidity. As you guys can see from recent student results from my mentorship and my Discord community, they are thriving off understanding what liquidity is all about. These are all liquidity type entries within the last week or so. Before we get into today's video, I just quickly want to give you guys an update from last video on the ALQ strategy results. You guys can see the total RR this month is now up to 19.6 RR, which is 20 RR. All of these trades are documented inside of the mentorship to show you how powerful the ALQ strategy really is. So if you want to learn more about the ALQ strategy and you want to learn more about the mentorship and the way I trade, click the first link in the bio to get 20% off the mentorship. But without further ado, let's get right into today's video. Okay everyone, so we're starting off with the types of liquidity, because this is something that is brushed over by so many traders and educators in the industry, but none of them go into great detail as what the new types of liquidities are. Because if I show you what everyone goes over in the industry, right, in these types of liquidity videos, you can see I say here the types of liquidities that you will encounter in the market, and it's more than just equal highs and equal lows. Because if you look over here, what can you see? This is what we all know liquidity as: equal highs and equal lows. And it is more than just that, because this is of course one of the types of liquidities that we will go over, and it is a very common type of liquidity that you will see in the markets. However, equal highs and equal lows are just the tip of the iceberg. We have all of these to go over next. So let's just start off with equal highs and equal lows. Just brush up on this idea. So first off, equal highs. Relative equal highs is just where a bunch of highs meet in a similar place at a similar price point, and this acts as a level of liquidity, as traders will be trading from levels of resistance over here and things of that nature. What people don't like to mention is, because they are an SMC trader, is that this can also be a level of supply. So there could be a supply zone resting right over here that people are going to be trading from, and they will also be liquidated alongside all of the other traders who are trading this level. So guys, don't think just because you've identified the supply and demand zone or a fair value gap you are safe. No, you have to look at it from an outsider's perspective. If there are relative equal highs, you should not be trading a supply zone or anything, even if it's SMC or ICT, because it aligns with our types of liquidity. That's the first thing. Second thing is equal lows. This is where relative equal lows are made in the market, which is a low, a multiple of them at a similar price point, indicating that there are a lot of heavy traders trading this level in terms of demand zones, support levels, whatever it is, right? Head and shoulders, double bottoms, all of that stuff. These traders are about to get liquidated by price. Very, very simple. We all know everything there is about equal highs and equal lows. We move on to trendline liquidities and chains. People often talk about trendline liquidities, but they don't talk about chains, and I'm going to explain to you what chains are. In this example, we have a bullish trend line, right? We can see that price is moving upwards. It's a dynamic level of liquidity, because it's not sort of relative equal lows where it's just at one particular price point. It's a moving price point. However, price is bouncing off from this particular line. So we know eventually the traders trading this line will be liquidated. Who else will be liquidated? It will be the people trading the fair value gaps from the zone. You can talk about bullish order flow and things like that, and I 100% trade things like bullish order flow and bullish fair value gaps. However, when we see multiple sort of bullish fair value gaps being mitigated in quick succession, this can also be a form of liquidity. As smart money and other sort of institutional traders in the market and institutional entities in the market will know that there is a ton of liquidity resting at these fair value gap chains and these demand zone chains and the buy order block chains and the trendline liquidities and all of that stuff, no matter what you want to call it. So we have to identify this as an area of liquidity. Same thing goes for trendline liquidity towards the downside. This can be seen as a regular bearish trendline. However, it can also be seen as a supply zone chain, right? And if this chain goes on for too long and happens too quickly without enough rest between it, right, without price developing on its own between these between these supply chains, and it's happening too quick and in succession, that is also another form of liquidity. And yeah, these are the new forms of liquidity that you guys have to catch up to speed with, because if you don't, you will end up getting liquidated. The last one is hardly ever talked about, and that is significant highs and significant lows. So this could be previous day highs, previous day lows, 4-hour highs and 4-hour lows, and anything of that nature. It could be a news high and a news low, any sort of high or low which holds significant market value in comparison to any other high or low in the market. Like I said, previous day high, previous day low, a week high, a monthly high, whatever it is. If there is a high or low which holds significant value in the market due to its structure or due to a news event or something like that, then we have to mark this up as a level of liquidity, because we don't want to trade alongside this. Because what can happen is, let's say we have a daily low right here, a previous day low. I'm going to mark this up as previous day low. And then some of you see a fair value gap right above it. So you're going to be thinking to yourself, oh wow, we have a 4-hour fair value gap here. Let me look for the market structure shift. Oh great, got the market structure shift. And then price ends up stopping you out. The reason is because price was looking to liquidate all of the traders trading at this previous day low and ultimately at this fair value gap. It wanted to sweep this level of previous day low and sweep all the traders, and then it would have made its move towards the upside, right? So this is what you guys need to be looking out for as well. Same thing goes for a previous day high. If we have a previous day high over here, price could potentially react from this fair value gap and then, give you a sort of fake market structure shift, and then it comes up, liquidates all of the traders here and over here, takes out this previous day high, and then it reverses in the opposite direction. This is what you guys need to be cautious of, and I have now taught you the updated list of liquidities that you need to educate yourself on. It is no longer as simple as equal highs and equal lows. You need to know this, this, and this. But yeah, guys, take a screenshot of this. Feel free to, document this, put it in your diary or whatever, and learn all of these types of liquidities so that you are clued up when you go into the technical analysis and into the market, and you don't end up trading alongside this. Because if you are currently getting stopped out, then you need to know that you're trading alongside one of these 6 things, and you need to cut that out from your trading. But what we'll do now is we'll go on to this slide, which is teaching you examples, from the live market of all of these types of liquidities, but in the form of, analysis, right? So we have our market analysis over here. And now let's move on to equal highs and equal lows. So as you guys can see, I've literally taken this diagram and put it over here in the form of real life candles. This is from all of these are basically from EURUSD as well. So a pair that most of you will be trading. Here you can see an example of equal highs. Right, 3 relative equal highs meeting alongside, the same sort of price and the same sort of level, all alongside this line over here that I've marked up. And you guys can see we have a supply zone here that many of you might be trying to trade, or this fair value gap that many of you trying to trade. Price might react from it for a bit, but ultimately we don't know whether it's going to react or whether you will be liquidated alongside the traders who were liquidated from these equal highs. Same thing goes for over here. We have a level of equal lows. Price came down to this line multiple times. We have demand zones, etc., etc. Loads of traders trying to trade this level of equal lows. What happens? Some of you are going to try and trade this bullish fair value gap and this order block, this plus bullish OB. You're going to try and trade it. Price might react in your direction for a couple of pips, but ultimately what happens? You get liquidated alongside all of the traders who are trading this support zone. And then it moves in the desired direction. Same thing goes for the trendline liquidity and chains. You guys can see here we have a bullish trend line. However, what also lies at this point, we can see demand zones. So many of you would have entered from these demand zones, winning, and then we wait for the next break of structure, winning, and then we fail to see a break of structure, but you still see the demand zone. So what you try to do, you try and buy here, and then price ends up liquidating you alongside the trendline traders. Same thing applies for this example. We have a bearish trend line. People are trying to trade from this trend line because it's tapped into it many times. Then you try and jump into the market, not knowing you're trading alongside them. What do we have? We have a supply zone chain, supply zone, supply zone, supply zone. right? You try and enter from, I don't know, this supply zone over here, for example, and then what happens? Price reacts for a bit, and then it ends up liquidating you before doing the actual move. You need to be cautious of that happening. Again, significant high or significant low. An example of this is a previous day high. Over here, we can see we have a previous day high. We mark this up as a significant high, an area of liquidity. We can expect price to come up to this point, sweep it, take out the traders trading this fair value gap and trading this supply zone, take out all of the traders trading this significant high. They think that this is a high where price is gonna, come to and bounce from. Nope, it's gonna take all these traders out, come up, reverse, and there is where the real trade happens. So guys, these are all examples from real life charts, taken from real life charts of the liquidities I explained in this previous slide. And all of them, you can see how you can easily mistake them for SMC and ICT trades, but you are just trading alongside the majority of the traders in that point in time. What we're going to do now is we're going to move on to the real life chart example. Actually, no, we're actually going to go through the entry model for this particular liquidity model, right? Because you have all of these liquidity examples and you're wondering, how do we actually get a trade out of this? The way you get a trade out of this is by using the entry model that we have right here. So first things first is you wait for your sweep of liquidity. You identify one of these levels of liquidity on any time frame that you want. All of them serve a different purpose. These kind of liquidities you can see on any time frame. This kind of liquidity you will see on the lower time frames, and this kind of liquidity you will see on the higher time frames. In this case, let's say we had a previous day high over here, right? And this is the trade that we will be going for. First things first, identify your liquidity. I didn't actually mention that, but realistically, you should be able to do that now after watching the previous slides. We wait for, number one, we wait for our sweep of liquidity. So we have this previous day high and we wait for this high to be swept towards, obviously towards the upside. Then after we see price trading above this high and stopping out all of the traders from this level, we identify the point for a shift in structure. So we have a level of demand right here and we have this low. We can say this is the point where we'll see our market structure shift or our shift in structure, whatever you want to call it, right? So we had the previous day high, it gets swept. We move on to like the 10-minute, 5-minute, some sort of lower time frame, and we wait for a shift in structure. So let's say we had a bullish demand zone and we had this supporting low over here. We would wait for price to get rid of this low, and then we will look for step 3, which is after seeing the shift in structure, enter from fair value gap or a supply and demand zone. So in this case, we enter from a supply flip zone because we got rid of the demand, and then we move on to the supply, and this is where we enter from. Last thing is SL and TP placement. Of course, your SL will go at the invalidation point, which means the point at which if price goes past this point, the trade becomes invalid and the trade idea is invalid. So we must secure our losses off of the table. So in this case, the point of invalidation and the SL for this trade would be this high, because if price goes above this high, we know the trade idea is invalid. And the TP placement can go at, any form of TP that you like. So an opposing zone, equal lows, an area of liquidity, whatever suits the trade. But yeah, guys, that is the entry model. This is how you're going to make money from this. This is the examples and this is the knowledge. You need to consume all 3 of these slides to be able to understand and master liquidity in 2024 and going into 2025 for your trading. What we're finally going to do now is we're going to move on to the real life chart examples and we're going to start analyzing liquidity in practice and seeing how we can catch some good trades like some of my students did on the community. So I'll see you guys in just a sec. Here I am on the 5-minute time frame on EURUSD. Alright everyone, before we get into EURUSD, I just want to quickly give a quick notice about Axe Trader Funding, the best prop firm on the market right now, offering the most platforms any prop firm will allow, including MT4 and 5. You pay once and try twice, keep up to 100% of your payouts, 7-day weekly payouts, no min and max trading days, and all of the other great benefits here with Axe Trader Firm. So make sure you click the first link in the description to get involved with Axe Trader Firm. Use code SM2 at checkout for 35% off. But yeah, back to the breakdown. And I am going to be identifying a liquidity type, and then we're going to explain what the mistake would have been for most traders. Then we are going to do the entry model for entering from a area of liquidity. First things first is try yourself to identify the liquidity that we have on the screen right now. And you should have thought it was this level of equal highs right here. As you guys can see, price has come into this level more than about 6 times, I'm pretty sure. 3 times here and another 3 times, 4 times here as well. So we know this is an established level of liquidity. However, some of you may still be wondering why we haven't traded from this. Because if I presented this trade to you like this, oh look, we have a supply zone over here. We have some sort of dynamic liquidity sweep over here. We have a market structure shift from this demand zone over here. We should be entering with sells right about over here, right? This is what some of you are going to be thinking. And a very nice risk to reward of 1 to 7. What happens? You get stopped out just like that. So instead, what you missed out on was price. What did it do? It amounted all of the liquidity over here, and then it ignored this supply zone. This supply zone became an area of liquidity alongside this equal highs. So what do? We move on to the 1 minute time frame and wait for our entry model. So first we've identified the area of liquidity. Then what do? We wait on the lower time frame for our sweep and then our shift in structure. So we see the sweep there. Now we wait for a shift in structure. I'll be waiting for a shift in structure at this low over here on the 1 minute time frame. This can now be in black. Okay, shift in structure is there. Now we go for our entry. In terms of an entry, I don't see a clear entry as of yet, because this fair value gap has already been filled by this wick over here. So the new point of invalidation for this trade is this wick. I put this in gold. So this is where our stop loss will be. Let's try and wait for an entry. Okay, this is our entry. So this is our market structure shift. This is our liquidity sweep, and this is our stop loss for a trade. Our supply zone is here. We can enter from there. Our stop loss will go at the point of invalidation, and our TP will go at this low all the way down here, giving us a TP of basically 3 Rs, basically 2.7 Rs. And yeah, let's see how this trade goes. So again, sweep, shift in structure, understand what we have, entry from a supply zone, point of invalidation goes here, TP goes at this low. Let's see how price plays out. And just like that, we hit TP. We could have actually put our SL at this supply zone. We would have got a 1 to 8, but to keep things realistic, I would have probably put my supply zone all the way up here. So we would have got a 2.6 RR trade just like that. And you also would have avoided entering from the supply zone now that I have taught you how to correctly identify areas of liquidity. Let's quickly move on to another example. Alright everyone, here I am on the NAS 100, and we're going to be identifying a different type of liquidity, talking about the common mistake that traders would make, and then we will talk about how to gain an entry using the model I have taught you. So first things first, we identified this previous day high as our area of liquidity. I am just using this indicator here to tell me where that is. Yeah, you guys can find that in your own time. And yeah, this previous day high is my area of liquidity. I'm on a 20-minute time frame. I'm gonna move on to the 1 minute time frame and look for my sweep, etc, etc. Before we get into that, we look over here and we see that we have a supply zone, right, that people are going to be trading from right as we look at this analysis, right? People are going to be trading here, targeting, where would they target? They could target this dynamic level of liquidity here. And that is a nice 1 to 6. Look, they're in a bit of profit. Just how I mentioned before earlier in the video, they get into a bit of profit. And then what happens? They get stopped out, as you can see right there. But now we move in onto the 1 minute time frame and we look for our entry. So price has swept. We're gonna wait for our shift in the structure after seeing the sweep. So where will I wait for the shift in structure? I will wait for a shift in structure from, let's just say, this low right here. Okay, interesting. Let's bump up a time frame, get a better understanding of what's going on with price. Okay, interesting. So what I will say for this particular trade is that we have now seen a shift in structure here, and price has given us a couple of points of invalidation for this trade. So we've seen the shift in structure. Now let's talk about the entry for this trade. Price has mitigated the supply zones up here. It has mitigated the fair value gap here, and it has now made a new break in structure. So I'm going to take the point of invalidation for this trade, this high over here, because I don't expect price to come above this high, or else the trade idea would be invalidated, because we can see price successfully mitigating a fair value gap and then making a new structural level. So my entry can be anywhere in between. So I will go for this supply zone entry. So I will sell from here. SL goes at the point of invalidation for the trade, and the TP can go at this fair value gap here. We can target the 50% of this fair value gap right at the OB here. We could probably bring that down to the OB actually, just about, maybe about there. And yeah, that is this trade. Let's play this out. Tagged in and swiftly tagged out in literally 15 minutes. That is 4.6 RR. You could have been halfway to passing an FTMO right there. And yeah, that is another example of using this liquidity sweep entry model guide and how to avoid the common mistake of getting liquidated. Thank you all very much for watching today's video. That is going to conclude all of the examples and knowledge for this video. If you guys would like more videos on the specific topic, make sure to drop a comment down below. Make sure to check out the mentorship if you want more guidance and more overall understanding of the markets and the way I trade. 20% discount is currently running. Make sure to check out axtrader.com and use code SM2 for 35% off at checkout for any challenge type that you want. But thank you all very much for watching, and I will see you in the next one.